Well, good afternoon. Time to have a look at the markets. Asian markets mostly higher as investors look ahead to Fed Chair Jerome Powell's Jackson Hole speech. Of course, we did see higher Chinese tech stocks, and these are the tech stocks that are listed both in Hong Kong and the US. And this is on reports that Washington and Beijing are getting close to reaching an agreement that would allow US regulators to inspect the audit companies of the particular stocks that are listed in Hong Kong. Meanwhile, locally, when we look at the rand, a little bit weaker in early trade, around 16.85 at this particular point. And when we look at what's going on the side of the oil price, Brent crude right now, apparently quite stable, but it did rally earlier this week as Saudi Arabia did mention that they may have to, flag some potential cuts when it comes to OPEC plus output. And this is in order to stabilize the market. We do know that oil has lost about a quarter of its value since June. And this is on the back of concerns that the global economic recovery could not be as anticipated. But to talk to us about the week that was, and perhaps even throw forward to what we can expect next week, we are joined by Jones Gondo, who is from Nedbank CIB. Jones, thank you so much for your time. So you have markets looking ahead to Fed Chair Jerome Powell's comments at the Jackson Hole Symposium. What's the sentiment right now, and what's driving those markets?
Yeah, thank you. I think the symposium, everyone's waiting for Jerome Powell's speech. We've had two other Fed presidents kind of speak a hawkish tone, and we therefore expect quite a hawkish tone from Jerome Powell, but it's more about the glide path that they think they can get to credibly fight inflation in the US economy. So if it is a really hawkish statement, so we're looking at perhaps another 50 or 75 basis points at the September meeting, then that is going to be negative for earnings. So I think the market and the S&P futures has got a slight negative tinge to it going into this, but the reaction will come after about 4 o'clock our time.
So yesterday you had the Competition Commission raiding the offices of about 8 insurance companies on possible collusion. What have we seen so far when it comes to the share price movements? Have they recovered? And I suppose also, how concerned are you about what we've seen?
Okay, so the share prices of the listed insurers, there were 8 insurers, 5 of them are listed. Their shares are down on average about 3%, and since yesterday's announcement. And they did mount a slight recovery from yesterday's lows. But still, it's I think the market is just waiting to hear more. So far, it's just a statement of investigation. But we will hear from management and the Competition Commission. I think what we worry about, or the market should be really concerned about, is that these types of investigations can have a long tail and could take a very long time. And if there are any remedial measures, the kind of exposure to the sanction of costs, any other kinds of liabilities, all these things need to feed into adjusting revaluations, especially if maybe part of the regulation, part of the response might be a structural change that will be imposed on these insurers. But for now, I think we just need to wait to see the scope of the investigation and the depth of the problem or severity of the problem.
And I suppose another, story that can tie into the idea of investigations, you have the JSE imposing a 2 million fine on, former Steinhoff CFO, Ben Lechranji, and that public censure and barring him from a director position, I think, for the next 10 years or so. Is it reassuring that you have such a regulator like the JSE taking its rules quite seriously, especially when you have individuals or perhaps even, organizations that may breach those rules?
It is fundamentally, just looking at the principles of it, is that if there has been a material breach, particularly in terms of the trust we put into financial disclosures that are put on, and the JSE listing requirements are quite clear, and when there's a breach of that, there needs to be accountability. I think what has been outstanding has been the time it's taken to get to this point, but I understand that the person in question, Ben Lagrange, was quite cooperative with the JSE in pursuing the investigation. So I think to sort of put an end to it doesn't end here. We want to know, what the rest of the picture looks like, and the help that he's provided the JSE so that we see the full set of sanctions. And I think the story that goes out to all, I think, members of the JSE and listed companies is that, they do take these rules very seriously, and that needs to stand as credible and not just on paper or nameplate only.
Right. The reporting cycle in South Africa in full swing. So far, what do you make of results season? Any surprises either on the up or downside?
No real surprises. I think the results were all fairly well guided this week. I think the main thing to highlight is the difference between those that have guided and declared for dividends and those that didn't. If you just take the context that we're coming out of a recovery period from the pandemic where a lot of dividends were suspended, and we've seen share prices of particularly commodity-based companies really rally. So we're looking at companies like Sasol and Thungela, and the fact that Sasol resumed with dividends was something positive for the market. And we've also seen that with a lot of the mining companies in particular that have come out, is that they are starting to see quite significant cost pressure starting to come into their earnings. So if we try and extrapolate going forward, it's a tough operating condition that we're entering. And so I think that's been the mix, is that it was great to see the recovery results set into in for these companies, but the outlook still looks fairly tepid.
You have China pledging about $146 billion in infrastructure investments to shore up the economy. How confident are you on China's economy and even a potential recovery given the lockdowns and the impact it's had on various sectors?
Yeah, look, I think they have been fairly accommodative for certain imbalances in the economy. We can look at just a property sector has been under significant and severe pressure. And so a lot of the accommodation on rates has been to prop that up, and then also that has fed into certain banks. And so that always gives you a financial condition that is not the strongest to mount a very strong and robust recovery. So whilst they are, stated more than $100 billion, almost $150 billion worth of infrastructure stimulus, we've seen that the market has reacted to that in a marginally positive way, probably propping up commodity prices, the expectation. But really, China's growth has been really, really weak. And some of the challenges that they still have, sort of the backlog in supply chains, all still needs to be worked out. It'll take some time for that growth to start to manifest through the real economy. And especially that, inflation pressures, even for them, are still on the rise. If you look at the PMIs are looking, fairly uppish. So I think the long and short of it is it's very difficult to write a strong motivation for China's growth at this point in time, especially when the world is going into secular stagflations and we're all worried about growth outlook for the rest of the world. I think that's the long and short of it.
Jones, thank you so much for your time. That is Jones Gondo from Nedbank CIB, giving us his perspective on the markets. And of course, we do have that Jackson Hole Symposium where Fed Chair Jerome Powell is expected to give comments. We'll unpack those for you on Monday when we do return. But that is it for me. We're going to take a quick break. When we come back, we'll have SME on point with Diabo Sitro, so stay tuned.